My loan officer said I can't qualify.
Yeah, but there's lots of different ways.
Hi everyone, welcome to Keys to Real Estate. My name is Joanna Lasalde, and today we have very special guests with us. So we have Sean and Stacy from the Lending Co. They are going to help us answer some very important questions. How much home can I afford with a $70,000 salary?
$70,000, that is a good salary. That's a salary where you can actually afford to buy a home. So that's really exciting. Even a home here in Utah where homes are a little bit more expensive. The key thing when we are qualifying you for a loan, we are looking at what's called a debt to income ratio. And if you've watched previous videos, you might already know what a debt to income ratio is, but I'll just explain it to you really quick. Basically what we do is we're going to take all of your debt, your monthly payments on your debt, not your balances, your monthly payments on your debt, and we are going to add them together. So when we're talking about debt, we're talking about anything that reports on your credit report. So student loans, credit cards, car payment, those are the debts that we're looking at. So you take the minimum monthly payment and you add those together. Okay. And then what we're going to do is we're going to take the proposed house payment, we're going to add that in, and then we're going to look at your income, and we want all of your monthly debt plus the proposed house payment needs to be around 42% of what your income is. So if you are making $70,000 a year, your approximate income is going to be about $5,800 a month. So you're looking for your house payment and all of your debts probably to be somewhere around $2,200 a month in order to be around that 43% debt to income ratio. So that's kind of what you're trying to find. So because I have qualified many people with $70,000 salary, I kind of know where that's at. At a 6.5 interest rate, your payment on a $350,000 house would be around $2,100 a month. And that's going to be your total payment. It's going to include your homeowner's insurance, your taxes. You might have an HOA fee that we have to look at, but you're going to be around $2,100, $2,200 a month. And so what you want to do is you're going to take that $2,200 a month, you're going to divide it by 58, you're going to get a ratio, and if that ratio is under 45%, then you are going to be okay to qualify for a home. Now, we are a little bit under the 45%, so if you are making $70,000 a year, and let's say you have a $350 a month car payment, or you have a $200 a month car payment and $150 a month student loan payment. So, about $350 a month is about what you can have in order to be able to buy a $350,000 home with $70,000 salary. So, that's really what you're looking at. It's, there's lots of calculators, there's lots of things online to help you, but really every situation is really unique. And so the best thing you can do is just talk to a realtor, have them refer you to a lender, and get to know the information for your specific scenario.
Thank you so much, Stacy. I think that answers a lot of the questions that our viewers may be having right now. I do have one question for you guys is, what is the maximum debt to income ratio that most lenders accept?
What we're wanting to do is probably stay right around that 45%.
Yeah.
Because you're talking about potentials that could happen. You're interested in a condo with an HOA fee. That's going to take a hit on your debt to income, kind of push that debt to income a little bit higher.
Yeah. And I think the most important thing when you're trying to be pre-approved for a home is not necessarily where your ratio is or where the house paid, what price of the home. The really big question that you want to answer is what you can afford. What can I afford on a monthly basis? And then we go from there, right? We start by the payment you can afford, and then we work from that. So that's the most important thing when you're buying a house is affordability.
Perfect. Anything else that you guys want to add in?
I would say one thing. What if someone has a rental? And a lot of people would say, okay, well, if I have a rental or if I want to rent the existing house that I'm in, how do I qualify with debt to income with the rental?
We're seeing a lot of different out-of-the-box ideas right now. Yeah. And I think that is like a really good point, Sean, is that don't get discouraged if you feel like, oh my gosh, I'm making $70,000 a year and I can only afford $350. Well, you know what?
My loan officer said I can't qualify.
Yeah, but there's lots of different ways
not be
to qualify.
Diane.
Yeah, which is why you want to talk to a loan officer.
So definitely talk to the experts. Thank you guys. Thank you so much for being on the channel today. As you guys know, contact me, email me. I'm always here to help, and so is Stacy and Sean.